Let's unpack National Capital Region's luxury housing demand. After all, when India's largest real estate company DLF sells over 1,000 flats, each priced at 7 crore rupees plus in 3 days flat, it begs a question: who's buying? Are investors back in Delhi, Gurugram and Noida's real estate market, or is this genuinely end-user demand? And what are numbers telling us about the future of this segment? Joining me to answer those questions, Tarun Mehrotra, Regional Business Head, North and East India at Tata Realty and Infrastructure, Amit Goyal, CEO, India Sotheby's International Realty, and Samir Jasuja, Founder and CEO at Propequity. Tarun, I'm going to ask you the first question because you are in the hot seat. Are sales really that fantastic? I mean, Samir, of course, the numbers are showing it's strong, his Propequity report, but what's your own experience with Tata projects?
Yes, the numbers are very, very strong, Manisha. The problem with us now that we are facing, and like we usually do, from one end of the extreme to the other, that now we have no inventory. We practically sold out everything, whether it was in the luxury segment per se, and even the mid-market segment, we are selling like hotcakes. So the problem really is how to get new inventory as fast as possible on the table.
Go ahead.
Commenting on your original comment, what we face is that they're largely end users. So we've been lucky that we've had been selling quite a few ready to move in projects, and they're largely targeted to end users.
All right. I'm looking at you talking about ready inventory, and I think Propequity data says that ready to move in inventory of luxury homes priced at above 3 to 4 crores, which is $500,000 above, is just about 150 units left in the entire National Capital Region. These are, of course, builder units. Inventory overhang of luxury segment in Delhi, Noida and Gurugram is at 10 months vis-a-vis 15 months for all segments combined. So luxury is actually the lowest number of units available, even if you look at the time taken to sell them. Amit, are you also yes, maybe for Tata Group it is end user demand mostly, but what's your experience been, because you also sell secondary transactions, or you do secondary transactions? How much of it is end user demand and how much of it is coming from HNI investors who are beginning to see probably that residential real estate is a good investment opportunity?
Sure, Manisha. Thank you for having me on the show. You see, people's desire for larger space as well as lifestyle upgrade is something which has been a big motivation and driver for most of the demand of late. We have seen largely end users coming forward and buying these luxury properties, high-end properties for their self-use. Some of them are under construction. They are near completion. They come from very credible developer groups, likes of Tata, likes of DLF, and that is a testimony how DLF could sell, as you rightly mentioned, in 3 days over 1,100 units. It clearly defines the market. That market is on a robust demand, and most of these buyers are buying it for their children's self-use, their own self-use, and some for investment, as they expect market to rise. Last 8-9 years, markets have seen a little bit of stable pricing. But now I think the next decade could belong to real estate as an asset class where there could be some upside. So investors are indicating that they are also buying real estate for their investment purposes. Okay.
Samir, is it confirmed that, the Twitter chat was all about whether it's brokers who are giving in the checks, or is it really, HNIs buying this inventory in the DLF project? It was a project after 10 years from DLF, a high-rise project, and the market has shifted in the last 2-3 years to independent floors. Is that why it did so well?
A couple of reasons why specifically the DLF project did very well. One was that they have demonstrated their capability in luxury housing through Magnolias, Crest, Aralias, and Camellias, and this is going to be in the same lines as these projects. Secondly, that they had 4 times the amount of bookings. So they could very well be choosy to get only the end users in, and they had a lock-in of 18 months, which pretty much keeps the investors out if they want to trade very quickly, because DLF strategy was that they will launch at a slightly lower price at 17,000 rupees a square feet, and then take the price up to 21,000 rupees a square feet immediately based on the success of the project, which they are going to be doing shortly. So long-term investors would have participated, and 30% of the inventory was kept also for the NRI clientele. So there's a lot of NRI interest in addition to the end user interest, and then followed by the investor interest, because right now, thanks to consolidation, there are only very few developers who are launching projects. So there's very limited inventory out there, but all the projects are being able to sell out. Given a case in point, Puri Constructions launched a project on golf course extension also at the 17,000 rupee price bracket, and it was sold out in less than a month. And there were also 300-400 flats. And mind you, the pricing in golf course extension before that a year ago was 10 to 12,000 rupees a square feet. So with a 40% price increase, they've been able to sell projects on plan and in less than a month.
All right. So reasons to smile, Tarun. So I'm looking at, the Tata projects in NCR, and you've got one at Haley Road, which is the premium location in Delhi, and you've got more in Gurugram. Noida, is that a market that you're not, looking to expand in? If the market is so good and you're struggling to actually launch projects within NCR, which are the markets you think will be the strongest, and where will you launch next?
So, Manisha, Noida is a very, very strong focus for us, and we have a project there which is doing very well called Eureka Park, but it is in the mid-market segment. I'm sorry to go back to the same problem that, the problem is the inventory that, a project takes around anywhere between 12 to 18 months from acquisition to go to market. That's the minimum if it's at full speed. And in certain geographies like Delhi, it may take much longer because there are multiplicity of authorities. It has to go through various levels of approvals, and takes even up to 24 months to get a project approved. On the other hand, the land expectation or land prices has gone through the roof. I mean, while there is a lot of buoyancy in the market and a lot of offtake, because there has been a kind of a vacuum in the market from top developers to be launching, like you just said, that DLF launched a multi-storied luxury project after almost 10 years. And we've sold out all our luxury inventory practically in the NCR, barring a few, 10, 15, 20 units, which is not sizable inventory. But to get a new project, the land expectations are just not making sense to run and write a check and acquire that land.
Has that happened, Tarun, because of, so many projects or so many developers taking the route of independent floors in a market like Gurugram? Could that also be the reason, or do you just believe that the cycle has turned around so quickly that landowners are now, they've just jacked up prices?
Yes. The number of developers now left in the field are much lesser than pre-COVID. Right from demonetization, the unorganized sector was kind of taking a toll, and by the time COVID came in, post-COVID, the organized segment, there haven't been that many number of launches. Yes, there have been tried and tested some, those Deen Dayal kind of schemes which were launched, which were in the mid-market segment. But genuine luxury launch has not been around until now. So until actually Puri Constructions launched their project, and then DLF, followed by DLF. So there is a lot of expectation and demand in this segment. And again, this is pent-up demand.
All right. Samir, here's Tarun representing Tata Realty saying land is gone out of whack, and it's going to be hard to actually find land to launch multi-storied high-rise projects in the luxury segment going forward. Your report says that luxury launches are probably going to be the highest number in the overall pie of what is launched in NCR in the coming year, 2023. Can you tell us what's coming and how will it be priced?
There are two pockets in Gurugram which are doing exceedingly well, and there's still enough land out there, not for the developers who already don't have the land, but for the developers who have the land. For example, I'll give you in Golf Course Extension, MR has a large parcel of land, over 100 acres. So they would be planning a lot of launches now, given the prices have gone up so much. There would be projects. M3M is launching. It acquired a large land parcel from Sahara Group, and it's launching left, right, and center on Dwarka Expressway. So, and the prices have gone up to 17,000 in Golf Course Extension and to 13,000 rupees plus in Dwarka Expressway. So, all projects that are going to be launched over there will be luxury projects because the pricing has gone up so much that you can't do a mid-level project there anymore. And these developers are holding land parcels, historical land parcels, and they are taking full advantage of the situation, and they're not going to launch at anything cheaper than that.
Okay. So, you're already saying that in 1 year, the market has moved from 9,000, 10,000 rupees per square foot to about 13, 14,000 in some areas, that's Dwarka Expressway side, and of course in Golf Course Extension right up to 16 to 17,000 rupees per square foot. But then it also came, Amit, like you said, on the back of very stable prices. In fact, I know that in Golf Course Extension prices did not move for almost 4-5 years, same with Dwarka Expressway. So I guess the market is doing a catch up now in terms of prices, and rather than it happening over 5 years, it just happened over 1 year. Tell me, sentiments in real estate are also very closely linked to how stock markets perform. Do you see headwinds to this luxury homes demand if stock markets don't do very well in the coming year?
Absolutely, Manisha. I would tend to agree with that. There will be some impact. After all, sentiments do drive real estate or any other investment decisions, be it any other asset class. But at the same time, as inventory has slowed down, my co-panelists, especially Tarun highlighted and Samir did as well, in the backdrop of low inventory levels and reasonably good demand. You see, while DLF, I would still say I will take it with a pinch of salt that all 1,100 units or 4 times, which is over 4,000 units, all the checks or the bookings were coming from end users, because getting those end users in 3 days is something which is still difficult to digest, because most of the time when we deal with buyers, especially premium segment, they do take few weeks, if not months, to really, take a decision for end use, right? So there could be some investor demand as well, is what I would suspect. But you're right, there could be some impact on the demand.
Okay, last final questions in terms of prices. Tarun, if markets have already moved so swiftly from 40, 50, 60% up, do you think there's room for luxury projects which come up in the future to be priced higher than 14 to 17,000 rupees per square feet in a market like Gurugram?
Definitely, because every input price has gone up. There is every construction costs have gone significantly up. Land prices have gone significantly up. If I were to plan a project today to be launched in a year's time, definitely the prices will not be accordingly, because the input prices are based on today's pricing, which is 17,000-18,000 rupees a square foot. Secondly, as Samir rightly said, people will have to keep planning projects which are worthy of that pricing. So the base price is going up, the overall profile of the area is going up, and if there's branded even now on Golf Course Road, there are 2 branded residential which are much higher than these said prices of 17,000-18,000 as well. So I do believe that prices will keep firming up, at least in established locations like the Golf Course Extension Road.
Samir, what's your own view? It's a very cyclical industry. We're also seeing that in some markets, especially South Mumbai market or Central Mumbai market like Lower Parel, etc., there was so much inventory that prices didn't go up for a very, very long time. Do you think that might happen in NCR region at all, or there's no worry looking at the numbers, such low inventory, ready and under construction?
I'll just share some more data points with you first. NCR region in all launched 15,000 units, which was perhaps the lowest ever, and the absorption was 32,000 units. So absorption is double of what was being launched. With the price increases happening, more developers are planning to launch projects, but I think there will be stability in pricing now, considering that there has been a lot of catch up that has already happened. I would like to believe that prices can go up anywhere between 10 to 15% more from here, and they should stabilize from there.
All right, gentlemen, thank you very much. I think we've covered all the points. I think people just needed to know what's happening in the NCR market. If everything is flying off the shelf, do they go in, invest, put out such a large check or not? Thanks very much for joining me.
Thank you.
Thank you, Manisha.
Well, if you're tempted to invest in a residential unit in NCR for rental income and capital appreciation, when we return, we bring you face to face with a rental management company which takes away all your headache of renting and managing an apartment.